This is Matt from InvestiQuant. Today is Tuesday, December 29th, 2020. And yesterday we saw the markets push up to 52-week highs in 3 of the 4 instruments. Very strong closes taking place yesterday. And today we saw gap ups across the board that have gone weak throughout the session. So looking at the S&P up here in the top left-hand chart, you can see we opened up above yesterday's high, and we have been pushing lower pretty much all session. So we're trading in the bottom portion of the range. We opened near the top portion of the range. Similar price action taking place in all of the instruments here. You can see NASDAQ here just below, opened near the highs, and it's currently trading down in the bottom portion of the range. Dow quite weak here. We actually have some outside days forming in the S&P and the Dow, and then Russell up here in the top right, pretty weak as well. But what I want to do this afternoon is take a quick look at what has happened when you get this weak type of price action following a 52-week high close. So let me go ahead and set this up and discover, looking at all 4 instruments. We're going to use an intraday time-based entry of 3 p.m. Eastern Time. It'll exit at 4:15 p.m. Eastern Time, which is the close of regular trading hours. Now, for the opening filters to describe this pattern, I'm going to say open above prior day high. That is the opening area here, top option. So I hit equals next to that and had added it to the test. Next, I'm going to go into the post-open filters, and this is where I can create the intraday price action that we've seen, where we open near the highs and we're trading near the bottom portion of the range as we approach the end of the session. So what I'm going to select here is I'm going to select that the open was in the top 25% of the intraday range, and that means the intraday range as of the entry time, which I've got set to 3 p.m. So that is very likely to be true. And then I'm going to go to this intraday close versus intraday range, and this is going to compare the price at the time of entry, which is 3 p.m. Eastern Time, to where it is in its range. So I'm going to scroll down just a little bit, and I'm going to hit equals next to close and bottom half of the intraday range. So that means at 3 p.m., it would need to be trading below the midpoint of the range for the intraday session. Next, I'm going to go to the price pattern section and say that yesterday was a 52-week high close. So that'll mean that we are in a really strong market. The close was strong relative to the trading that we've seen over the past year. And I can grab that from this active today section in the new highs category. We've got a bunch of things that are applicable for today, but I'm going to grab this day after 52-week high close. It actually comes from this section right here, and if I scroll down, you'll be able to see it. We've got a lot of options here, but day after 52-week high close is the one that I want to use. Lastly, I'll hit View Results. All right, here we go. These are the results of going long at 3 p.m. Eastern Time and exiting at the close, which is 4:15 p.m. Eastern Time, when the prior session closed at a 52-week high. And then today, the open is above the high from that 52-week high close. And since then, at 3 o'clock, the open is in the top 25% of the intraday range, and the 3 o'clock price is in the bottom half of the intraday range. So historically, this pattern has 35 samples in the S&P, 35 in the NASDAQ, 24 in the Dow, and 12 in the Russell. Pretty rare pattern there in the Russell. If we take a look at win rates, which is basically telling you how many of these have closed above that 3 p.m. price historically, we see that 60% of the S&P samples have closed above that 3 p.m. price. 57% win rate there for the NASDAQ. The Dow, 79% of the 24 samples have closed above that 3 p.m. price. And then the Russell, with the smallest sample size, has the lowest win rate at 41%. If we take a look at average win, average loss, looks like the average win not very big compared to the average loss here in the S&P, so average loss larger there. Very similar in size for the NASDAQ as well as the Dow, and then the Russell, not a whole lot of samples and not a big difference between the two on the few samples that they have. So historically, this pattern has been a little bit favored for the S&P, NASDAQ, and Dow. That has not been the case for the Russell. And you know, I did look at a couple other things as well, and I kind of saw a similar pattern in some of the other patterns I was trying to describe that I'm seeing here. And the S&P and the YM were a little bit stronger than the NASDAQ and the Russell based on today's price action. So that's just some stuff that I was looking at prior to sharing this, and they fall in line with what we're seeing here, where the YM and the S&P were a little bit stronger. So hopefully you found that helpful. Good luck today, and we will see you next time.